to the cloud. Hi everyone, my name is Preet.
My name is Brianna.
This is our AT&T cost of capital. So for question number one, how much interest-bearing short-term debt did AT&T have at the end of 2020, and what was the average cost of this debt? At the end of 2020, AT&T had an interest-bearing short-term debt of $63.438 billion, and the weighted average interest rate of this short-term debt was 4.1%.
What was AT&T's actual capital structure at the end of 2020 based on its consolidated balance sheets? AT&T long-term debt is $153.775 billion and equity is $179.24 billion, giving AT&T a debt to equity of 0.86. Short-term debt is $63.438 billion. The total long-term capital based on the three components above is $396.453 billion. The capital structure of AT&T at the end of 2020 is broken down into 38.79% long-term debt, 45.21% stockholders' equity, and 16% short-term debt. The total debt to equity ratio is 1.21.
For the third question, the long-term debt to total long-term capital ratio was 0.46 or 46.17%. This is calculated by the following formula: long-term debt divided by long-term debt plus equity. So in this case, it would be 153.755 billion divided by 153.755 billion plus 179.24 billion, which gives you 0.46. The common equity to total capital ratio was 0.53 or 53.82%. This is calculated by the following formula: equity divided by equity plus long-term debt. In this case, it would be 179.24 billion divided by 179.24 billion plus 153.755 billion, which gives you 0.53.
As of March 26, 2022, the 10-year Treasury yield is 2.47%. If the investment bankers tell AT&T they could do a spread premium of 1.5% greater than the equivalent maturity Treasury security, AT&T before tax cost of this long-term debt would be 3.97%.
For question 5, this tax rate that we are using is computed by applying the statutory federal income tax rate of 35% for 2010. To calculate the after-tax cost of short and long-term debt, we do the following. We take 3.97% from the previous question, multiplied by 1 minus 35%, 0.35, which is again the statutory federal income tax rate for 2010. And this comes out to be 2.58% for the after-tax cost.
Applying the cap M using the 10-year T-bond of 2.47%, we multiplied our beta by the market risk premium, then added the T-bond yield, and then we got 7.02%. And this is our appendix of the Treasury yield.
And that's everything. Thank you.